All right. It looks like we're all good to go. So, welcome everybody. My name is Jared, and this is Engineering the Markets. It is June 1st, 2022. So, welcome to a new month in the markets. We wrapped up with our May session yesterday. A relatively flat overall session. We opened approximately where we closed. And of course, we did open slightly lower than the futures market, which did have some Monday trade during our off session on Monday. So given that we have closed out the month, I figured it was worth looking at the S&P performance over the past month and kind of call out some relative areas of interest for the market. So first and foremost, our monthly candle inside of the May sessions opened and closed pretty much in the same relative price. So amidst all of our volatility that we love as traders, it's worth mentioning that the S&P from a price perspective has not really changed too much from May to end of May or April to May ending. Another thing that's quite interesting is as you look at the monthly perspective, you'll notice that amidst a lot of the more in-depth analysis from a technical perspective, May was one of those areas where we provided some additional downside in the market. What I'm looking at here is in the months of January and February, the S&P had priced down to about 420, and we spent a couple of months trading in between a wide range of about 420 to 460. The S&P didn't really necessarily make fresh lows until the month of May. So while this larger downtrend was forming at the highs after the March rally, the S&P really didn't see new price levels be explored until we got into the May sessions. And all this means is that what we're seeing right now is the market is having a little bit of hesitancy moving much lower relative to our May low, which is now set at May 20th. So whatever session low that is around 380 in the S&P, that's going to be sort of our price level to monitor from a monthly perspective, obviously the longer term perspective. Some interesting notes about this as well. When you're on the monthly perspective, you kind of get a sense of areas of the market that are of high interest. Obviously, anywhere the market consolidates, so this would represent sort of our previous election cycle consolidation as we were recovering previous all-time highs. We have, for the most part, a steady uptrend where the market made higher highs and higher lows for 5, 6, 7, 8, 9 months in a row. And then, of course, we get our more distributive price activity at the highs where we start to see a little bit of shakeup in the relative trend, the structure starting to be a little disrupted. And then, of course, we have changed in this most recent correction. Another thing you can also do here is pull out some of your normal tools. So, for example, if you're looking at fib trade and you're marking from high to low based on COVID, the COVID lows, then you have an idea of where the market has paused so far. One of the reasons why we were looking so heavily at the 20% drawdown along with that approximate 380 level is because it represents a 38.2 retracement inside of our larger fib structure. So as the market has climbed, obviously looking at a 38.2 retracement from this perspective puts the idea of a bull flag in the back of this structure. Might seem a little out of place, especially with a lot of what's going on in the economy and in the macro, but from a technical sense, if the market holds these price levels and then continues to consolidate in the upper ranges, you have what is structurally a bull flag that is in formation. Now, obviously, a loss of this level puts up the idea of more longer term consolidation. Usually when you get to 50%, you're looking for whatever bounces to occur to essentially set up lower highs. But in this period here, all we've seen is that structure form. And you can obviously kind of draw, the idea of the bull flag in this time frame. So very interesting level for the market to have tested. You'll note how precise this low is relative to your fibs. So for example, if this is anchored correctly, if I have the absolute low of 218.26, and then of course the absolute high of 479.98, which is marked. And then you observe where the 38.2 is, it is exactly 380. So from a fib perspective, if you believe in the sort of cyclical nature of the market, you'll often find these levels respected quite well. Additionally, you can set up trades around them no matter the time frame you're using, with the understanding that they kind of provide a probabilistic model of what the next move in the market is going to look like. If we hold certain fib retracements after something like a large expansion, that tends to basically favor the idea of continuation. And that is, of course, with confirmation and the move away from that level after it has been tagged. Now, obviously, a lot more bearish sentiment in the market is looking a little bit deeper. There's been plenty of people calling out a retest of the 340 previous all-time highs, along with the idea of even just coming to 350, which represents a 50% retracement from our high to low perspective. Now, obviously, this is all anchored from a relative low back when we bottomed out during COVID, but this perspective is to be considered, given that so far all we've done on the monthly time frame is get to 38.2 for the first time. It's our initial test of that retracement level. So obviously this low has a lot of interesting confluence, both in regards to what it did to the current daily downtrend. We have a weekly bounce underway in the market. And then of course, from the perspective of the monthly, we have a relatively flat performance in the S&P, as mentioned before, a bit of a spinning top. So we will look to see what that means moving forward. And one way to get a clue as to where some of these zones of interest lie, especially in the year of 2022, we can go back to our volume profile. Now, this is a study that most platforms will have in one form or another. The question is whether it can be customized to look at the market through different time frames and different expansions. But conceptually, what we're doing here is we're adding our volume profile. And on our default setting, you'll notice that really there's not a lot of value, especially on the monthly time frame. You're going to get VPOCs that are much lower in price simply because this is looking at volume over an expanded period of time. This is about a 20-year chart. So this VPOC obviously doesn't have a lot of value in this moment. One way you can change this is editing the study to be more reflective of what time frame you're looking through. So one thing I like to do is to break this down into the time per profile that I'm interested in. In this case, I'll look at a monthly. And what you'll notice is as I apply these changes, it condenses the volume profile down to each respective monthly candle. Now, as you can see, there's still not a lot of value here because from a candle perspective, our entire profile gets sort of smushed relative to the width of the candle. All you can really see is those VPOCs standing out, and you'll get something like an idea of where the monthly value was placed. Where was the highest transactional range in regards to each month? And I'm kind of highlighting each one here. That's easy to kind of get a small sense of what's going on, but let's go ahead and reduce our candle time frames to something like a weekly. Now you can see the overlap in the market where we've had multiple weeks, and yet the monthly volume profile has stayed within a relative range. For example, once we closed out February, the volume profile, especially from the VA high and low perspective, has a lot of overlap all the way into April. And what this means is the market was transacting around new value zones that weren't necessarily well established until a couple of months had obviously passed. We also had sort of our trending volume profile back in time. And what you'll notice is there is quite a simple cut through here. If I were to maybe draw the midline, a lot of the value zone sort of lies in that 440 to 450 range. Now, as we just experienced May, it's worth mentioning that the volume profile has moved away from a previous balance zone. From a weekly perspective, the market was in balance for a couple of months. Trading from February to April, we were seeing relative highs and relative lows, and the volume point of control not really changing too much, a little bit of fluctuation here and there. May, however, changed a lot of that perspective. You can see that the volume profile shifted away from our balance area, and we obviously got fresh lows in both the S&P along with new value zones established for the month of May. That's obviously represented by our 404.86 VPOC, which is the latest month's VPOC, along with our VA high and low of 414 and 385. So as the month of May has ended, and as we pull maybe up to a daily, you can also start to see some of the nuance of when major moves occurred in the market. For example, once we got out of February, the market was making a new value zone lower once the chop occurred after our low was set in January. We got a little bit of a short time frame rally. We established a VPOC much higher. And then, of course, we moved away. So the larger transitions are often going to be moves away from and then towards VPOC, depending on if you're expanded away or trying to move away. It really just depends on the assessment of the volume profile. You'll also notice things like once a VPOC is established, and of course, with our technical overview of the market, we got these larger rallies away from our volume profile, point of control. Similar here, lots of chop in the market, and then a strong reactionary candle to get us moving away from value. So if you look at the past couple of months, a lot of the larger moves in the market are highlighted by essentially a bit of chop, back and forth trade, usually balanced zones of interest. And this is usually something akin to maybe a week or two of trade, and then a move away from these zones, usually some sort of indication of momentum, breaking away from those balance ranges and seeing lots of follow through as we transition away. Now, the reason I bring this up is because May established a really different volume profile. We moved away from our larger range, and we established a VPOC that was much lower. This choppy area near the lows has started to move away and started to see a transition higher. Additionally, we're coming into the lower bounds of our previous volume profile. So from a range perspective, we're actually looking at back testing 4 months of overhead supply in the market. So worth mentioning all of this because yes, the market's going to have a little bit of difficulty getting back into this balance zone. But on this back test, pay attention to what starts to happen as we test this area. In fact, yesterday I would almost indicate as a pivot, an area of the market that could easily break bullish or bearish, depending on our next move by whether it be catalysts or some sort of shakeup in the S&P. And whatever this move looks like, it'll represent one of two scenarios. Either we'll get a transition away from our range, an establishment of new value, and then a return into the larger balanced range of the market, the one that's been set for 4 months of trade. This is where markets typically don't like to remain in imbalance too long. They like to go back to where the highest value sits. But if we move away from our range, if we attempt to come back in and then continue lower, that of course is our back test and rejection. The idea that we've already moved outside of range and we're looking to back test before continuing lower. So this area of the market has a lot of, I would say, structural importance. From a volume profile perspective, I would say that what we're seeing is the attempt to get back into balance range. And if it does occur, what's even more interesting is the size of the move will often lead us back into our VPOC for that range. So the way to identify something like that, because this is approximately 4 months of trade, we may want to refine our study a little bit further. Unfortunately, we don't have something like a 4-month or a quarterly, at least based on this default set of inputs. But one thing we could do is look at option expiry. And what you'll see is there's these overlaps of groups of option expiry time frames, usually about a month. They change where the VPOC lies, but then when you combine that analysis, maybe on one side of your chart, with a return back to our normal chart overview with no expansion, we'll apply this on the daily, you'll notice that the largest VPOC, the largest transactional value for the market so far, sits at about 435. So when you combine maybe an overlay of multiple ways to view this study, the perspective gives you an idea that while the market is still struggling, we're seeing obviously a continuation downtrend that is bouncing. And obviously a lot of people are looking at slower indicators for confirmation whether or not we're going to reject. Something like a moving average is what most people pay attention to. Are we breaching the 20? Yes. Are we coming into a declining and sloping 50 and 200? Absolutely. But where do we see the next move, the next major move in the market? Usually we need to come from an area of value. And if the market is moving back into a larger value zone, we need to respect the momentum that this implies. Hence why I was looking yesterday at this 430 and then of course 435 value zone that's already been established. If the market is pushing down and then moving back into balance, that target becomes an idea for where this rally could end, where the rally will see some sort of resistance, and obviously see another decision made before we continue on our potential downtrend. A way to kind of view this as well, we did some of this analysis in the IWM. What made the IWM a little simpler is the structure of the range was much more clear. Whenever you pull up volume profile on the IWM, it's pretty obvious to tell where VPOC is. And this has really not changed for multiple months, if not years. There's really a lower bound area of trade, which the market has already started to come back into. And obviously, you know, the thesis idea behind a back test of COVID highs in the S&P is not out of the question because it certainly happened in the IWM already. But when doing the analysis, when we were talking about returns to value, this is something that took place for multiple trades throughout the 2021 year of consolidation. Even when we got outside of range, we would often try to rally into balance. And this right here became a rejection or a back test rejection of that balance range, which certainly led to lower prices. You can see the downtrend really formed once that back test took place. So I do find that where we lie in the S&P, where the month of May has closed, and obviously some of the upcoming catalysts for the market are all going to be very technically interesting. They're going to have a lot of import based on where value sits, where we've come from in May, and obviously the next wave of price movement, the next clear directional bias for the market. So couple of notes for today. We do have one earnings on deck, so I wanted to call out CRM. It had its earnings last night, and as you can see, there's a bullish rally that's occurring for CRM based on the 160 close. We're trading around 175. The question is this really out of expected move, or is this a relatively normal price move for the earnings? Because we closed at 160, the option market was pricing in about $14. You can see that when you price an at the money straddle based on yesterday's pricing, that's about 15. So 175 is the upper bound of the expected move for CRM. If you're looking for much higher, if you're basically still bullish at this point in time, you're probably targeting that 180 price. And that's something that is still quite, I would say, high in open interest relative to some of the other strikes. And then, of course, probably work in $5 intervals. You have a little bit of a spread of open interest between 182 and 185. Just double checking here. It looks like we might have lost the YouTube feed. Can I get a confirmation that we're still good on YouTube? Yeah, it looks like we're down on YouTube, video-wise. Audio, yes. Video gone. I think this is just a minimization of what was being displayed, so I'm seeing if I can get that reestablished. Okay, it looks like we're good. Might have been just a little off click right there. So anyway, so for CRM, just kind of noting we're within expected move for the earnings weekly expected move. Doesn't mean it's not going higher. If you're looking for a fade, you'll note that there really isn't a lot of put open interest until we get back to the 160 price level. That doesn't necessarily mean the stock won't fade intraday. You may want to see whether there's some more volume coming in at slightly lower prices. So usually what I say for this is the information is not there at the moment. Doesn't mean it can't fade on the session. If I were looking at just the momentum and obviously the bias, if we get through 175 cleanly, 180 is not out of the question based on the option market. And then last but not least, we do have the beginning of June, the basically commencement of what we've been discussing from the Fed, which is quantitative tightening. Now, this concept and the idea behind quantitative tightening, the implications that it carries, is a much larger discussion that I'd like to have in the next 5 minutes. But if you wanted to just sort of understand high level what is starting to occur, the Fed carries a balance sheet of mortgage-backed securities and certain bond asset structure. They are allowing for, and starting in June, a lot of the assets that they carry to basically expire without purchasing new assets. For the most part, they have kept their balance sheet either stable at a certain asset allocation, or they've been increasing it throughout the period of quantitative easing. Now that we're entering into this new phase, and obviously the intention here is to fight off some of the higher inflation readings, we're seeing the Fed allow for about 47.5 billion in mortgage-backed securities and bond assets expire or mature, and they're not going to reallocate those to their balance sheet. So what does this mean for the market? What are some of the big implications here? We may want to watch for a few days as this process is beginning. Usually what you'll see is something like the bond market respond to this behavior. And what you'll note here is yesterday we did have a gap down in something like TLT, bit of a bear flag that's starting to potentially mature. There obviously was a nice bounce throughout most of the May session. We bottomed out on TLT and we've been slowly climbing for a couple of weeks. It could be seen a little bit more clearly on a weekly time frame. But there was a bit of a gap down yesterday, so we'll see if this does have some continuation, as this is indicative of a bear flag. We do have a sort of falling momentum, and it's obviously still in a very strong downtrend. So watch the bond market to see what sort of response is coming from basically some of the more mature trade in the market. You also may just want to watch what this does to interest rates. We did have obviously that gap up in interest rates based on bonds gapping down, and keep a close eye on your 30-year behavior. For the most part, this is going to be a bit of a longer time frame sort of clarification of this trade, but it is something that we're starting to monitor much more closely, as the behavior of the bond market is having a very clear and direct correlation to S&P performance and obviously sentiment and perspective in the market. One thing you'll also note, if you're following something like high yield credit, something like HYG or a JNK, there was a very sharp rally that occurred in both of these products near the end of May. So the spread differentiation between higher yield credit and of course a more, I would say, treasury secured credit, something like a bond product, that spread kind of narrowed as this was in its rally. So those differentiations of spread, obviously the perspective here being, are we more risk on or more risk off? Is the market willing to take on high yield risk, whether it be corporation risk or just lower credit rating risk? And what does that do for performance in those moments in time? Obviously, a 4-day rally of this magnitude is worth paying attention to, even though in the big picture, we're really just coming into some trend line resistance, just kind of an oversold condition here, rallied right to our trend line, but the speed and magnitude is worth paying attention to. We'll see how the market responds to this moving forward in the month of June. So all that said, my name is Jared. This is Engineering the Market. Enter into a new month with maybe a fresh perspective on what the market's going to offer. Obviously, look for the market to confirm or deny what's been sort of taking place in the past couple of months. And then as always, it's a fresh month. So take the time to maybe look at your performance as a day trader, a swing trader, option trader, or anything in between. Understand that you can always be making improvements and adjustments, and maybe reflect on what you did in May and how you can step into June with some of those tools and adjustments in place. So with all that said, stay tuned for pre-market prep, and we'll talk more tomorrow.
All right. Good morning, everyone. Welcome to PreMarket Prep. I hope everyone's having an amazing morning. Hope you guys had a great day yesterday. Good morning, Norm. How you doing today?
Good morning, brother. I'm doing well. How are you?
Doing good. Doing good. Um,
Sorry, I'm a little bit behind this morning.
Oh, no worries. Guys, let's give Jared a big thumbs up for engineering the markets this morning as we get rolling on the second day of this short week that we have here. So let's take a look at what we had yesterday on our list, starting with AMC was the first one we had on deck, and this one was actually pretty nice sell-off. Beautiful pre-market activity. They had a nice positive pop based on people getting back to the movie theaters. Top Gun being a big driver of people getting back into those seats. And you can see here, beautiful pre-market activity followed by a nice sell-off right at the market open. So didn't really hold on to the hype, sold off pretty aggressively here. It did get a couple of bounces there, but towards the end, it's just kind of dwindled down a little bit there. So we'll see how this is going to end up today if it's going to be in play. I already see 1.5 million on this morning. So already looking good as far as volume. I have not checked their pre-market activity yet, but we will in a couple of minutes. Here is Coin. Coin had a nice pop and rejection, guys. Here above the pre-market highs, 80.47. Look at this breakout on that first 5 minutes. It goes all the way up to 83.50. Then the rejection right back down. That's very aggressive. And from there, it got, although you had a nice breakdown here, it got pretty hard to take a trade on this. Look at the next candle opens up, and if you're looking for an opening range breakdown on the 5 minute, this was a tough one because it does pop up basically to the open of the previous candle, right? So how do you hold on to that for a continuation play there? So does drop down eventually, and then another insane candle going from 78 up to almost 80. Again, just the pullbacks on the 5 minute were very, very aggressive on this thing. Very hard to take a trade on that. Next, we have PDD, another one that also popped up, got a great rejection. Not as clean as we saw on Friday. Friday, this bad boy was amazing to trade. I got emails from a lot of you guys sharing your trades on that one, so thank you for that. Yeah, very, very good opportunity there on PDD. Yesterday, not so much. Again, just a little bit of a sell-off here. A lot of sideways action overall, right, yesterday. So you didn't get many clean moves on the market open. Here's Baba, another one that actually sold off. I was very short bias on this one, as you guys know, but did not like the way this opened up, did not like the way it continued after the 10-15 minutes, so was not able to take a good opportunity on this one. Here's Neo, guys. Neo was probably one of the like AMC, another one that was very clean, a nice little drop off here. Beautiful pullback to the moving averages, the VWAP, great opportunity, great risk to reward. And that was a beautiful short there, as you can see there on Neo. Again, does bounce back like many stocks, guys, just bouncing back into this mid area. Yesterday, we'll see what that means for us today. Here's Oxy. So Oxy, for the most part, again, has been very, very strong. Yesterday had a big sell-off towards the later parts of the day. Did try to hold this 72.01. I actually thought this thing was going to be stronger than it was yesterday, but again, if you look at the daily, it has been extended quite a bit. So in the later parts of the day, it starts losing the 72 that it tried to hold here, and you can see a nice drop off there on Oxy. Again, good opportunity still. Later in the day, of course. Apple, same thing, same situation here. Nice little pop, cannot hold the sell off, and then from there getting a bit of a bounce off 146.84. And as you guys know, it's a lot going on with Apple too. Artie and Andrew were talking about this yesterday on how people are looking at some really big sales coming in or big orders coming in for Apple at the buy. And again, eventually 146. I mean, this is depending on your trading strategy, that's a good price depending what you're looking at here, especially long term. So you might see some of those bounces and aggressive orders like we saw yesterday in the last couple of days. So that was the list for yesterday. Let's take a look here on our gappers list this morning. We are looking at a couple of things in the green today. CRM must probably have earnings because we never see these guys up here. And we have some other ones. I see an airline on here today. They had a bit of a sell off yesterday, which I don't think I had them on my secondary list. They didn't sell off too bad. They were gapping down, but they pretty much ended the day green. They're up another 1.8 today. So we'll see how that takes care of the airlines and travel. And then some stuff in the red, which I'm not aware of some of these names here, except ChargePoint AMC. So we'll dig into those as well. But before we get there, Norm, the SPY and overall market, what's the latest and greatest today?
Yeah, man. We've got a lot of economic data today. We've got S&P Global Manufacturing PMI at 945, then the ISM Manufacturing Index at 10, along with job openings and quits, or AKA JOLTS report, the turnover report. That will be at 10 a.m. as well. Construction spend 2, then St. Louis Fed president speaking 1, Beige Book 2. And of course, it's already June 1st. Cannot believe how fast this year is flying by. We will have auto manufacturers sprinkling in their sales numbers for last month in the next couple of days. There are no set times for those. So we'll see some movement there.
Yeah, absolutely. Looking forward to some of that information because, man, this market is starting to show some interesting signs, especially at my wife just got laid off last week, so we're starting to see that kind of turnover a little bit happening on some companies. So
Yep.
we'll have to see how that's going to affect things. But let's take a look here on what's happening, guys. This morning, we're going to go ahead and Control A, Control X. That's going to remove tickers from our watch list. So Control A, Control X. There we go. That cleans that up. Oh, PDD wants to stay here today. Let's get rid of that one too. And let's go take a look at our gappers list. Started with CRM this morning. So CRM today, we are up 8.6. Again, a little bit of a pop here today, $13 pop. I'm not a fan. This is Salesforce, so I'm not a fan of
they had earnings
how
last
this
night.
trades. They did? Okay.
It doesn't trade well. Good company, doesn't trade well.
Yeah, I'm not a big fan of it. So I'm gonna keep this one off my list, guys. CPRI, this is up 4%, 214,000.
Capri trades very poorly. It is an apparel maker
good.
out of the UK, and once again, we've got some duds this morning. I just want to be clear.
This list is not looking great right now, that's for sure. GFI today, what do we have here? This one up 4%, 829,000 on short selling restriction. I do not like the daily. What is this, by the way? This is Gold
South
Fields
African
Limited.
gold miner.
Yeah, I'm no. Let's take a look at something else. It's just again, it just doesn't look like it gets great volume. Yes, something's going on yesterday though, right? Yesterday got 65 million. That's more than what they usually get. So
yeah, they had news. They're buying another. They're acquiring another company. It came out yesterday. So they're just they had that move yesterday, and they're bouncing from it a little bit, but nothing to see here really from my perspective.
Yeah, agreed. Here is Billy. Billy not doing a whole lot. I mean, they're up 3.2, but they don't have a great pre-market activity. Their daily could be interesting there. Maybe a continuation of this pop we had on yesterday. A lot of Chinese stocks in the green. Yesterday we saw Neo and a few of them gapping up, Baba as well. I don't know. I'm not seeing anything too interesting on Billy right now, so we can always come back to that one. MRO today we are getting 2.7 on this, 178,000. Another one that doesn't trade very well, guys. I don't like the way this moves at times, so I'm gonna keep it off my list. Not liking a whole lot today here. UPST here. This is the one that had the huge gap down, guys. If you guys remember, this thing was down like, what was it, like 40-50%? It was just insane. Either way, you're getting slowly, you're kind of closing this gap. You had a little bit of couple of down days here, back up against the area of resistance around 55. That could be interesting. Pre-market right now, though, I'm not seeing anything that tells me to put this on the list, right? You're up 2.2. Volume is very light. Pre-market actually is not looking great. This is one that typically does not have a great pre-market activity, so you might want to put this one on a secondary and wait for the market open to come up. We have a decent, at least on a trade ideas, short flow interest on this one, almost 32 there. So that could be interesting. I'm not sure how accurate that is, but you know what? We'll put them not MRO, excuse me, UPST. We'll put them on as a possible UPST for now. Let's see where that goes. Here's Lee. This morning, again, up 2%, but really not doing a whole lot. Another Chinese company that's gapping up slightly. This that was gapping up great yesterday. Just kind of has a little gap this morning, but no significant volume. Heading down to our gap down list, CNCE. No, this is down 20%. Looks very choppy, guys. Does not get great volume. Float on this is 32.
A secondary as well.
Yeah, so not a great catalyst 32 million. Yeah, we'll skip on this, guys. APPS this morning, we are down 7%, 198,000. Man, man, oh man. I think the whole day today's a oh no, no, no day. All right, let's go to LAC. This one also down 3.4, 127. I'm just don't like the daily on this. Don't like the action. There's nothing really going on pre-market here. AMC. I know AMC has some volume. Let's take a look here. So, all right, so AMC worth putting on the list here. Down 2.6, 1.6 million shares traded. We can add that on the list. We'll put AMC right over here. So that's good. Charge point gapped up yesterday, sold off for the most part. They didn't keep it on the list. They're down 2.6 today. Nicely stock that this might do something. This
They had
might do
earnings last
something.
night.
Yeah, this might do something today. So let's see how that's going to play out. Earnings last night, it did drop down. No significant action so far this morning. So let's see what it does. AOVA, this is the one that gapped down huge a couple of days ago. Not looking too hot right now, though. I mean, we have 152,000, down 2.1, but not liking anything on this one this morning. All right, slim pickings for sure, my friends.
Welcome to summer, right?
Yes, season earnings season is dying down. Do we have anything good on earnings coming up? At least
GME's tonight. That was going to
Okay.
be one of my call outs. Potential there. We'll see. And then AMD.
Yeah, GME will be a good one. Then looking down, I don't see anything that's some of these companies not even heard of these guys. So yeah, it's not looking too pretty there. We'll put GME on here as a possible because that could be interesting going into earnings season later in the day. Maybe not the market open, but later in the day, right, Norm? We might have something there.
Maybe. Yeah.
Yep. Anything else you have on your list?
No, I'm still looking. It's kind of nasty.
It really is. It's not looking pretty today. Let's take it to the chat room. We'll start with Michael. You're giving us INTC and Ford. Let's take a look at INTC this morning. We have pretty much flat right now. And do they have any news? Because that's really the only time I really watched or think about watching Intel. This morning, they're pretty flat. I don't see anything happening for them. Yeah, I see what you're looking at the daily, right? Daily for a possible breaker. You have a couple of really nice days in here the last few, this week and last week, right? And then you're doing higher lows as well. So maybe a possible breakout against this area that could be interesting. I think you had mentioned this before because this chart does look familiar. But man, it's hard to put this on the list the way it is right now. So Michael, if you see something, definitely push it out there. And I think for you, kind of looking at the same setup as well, right? This daily for a possible breakout. Seems like you're looking at that, but as far as volume right now and activity, I don't see anything great on it. But I see what you're looking at there, and hopefully those get active. Heading down to Gary, you're looking at SIGA Ziga today. This one was active yesterday. In a couple of days in the last 2 weeks have been just insane, as you can see here. Again, we're popped up huge, sold off yesterday, and now we're gapping down slightly. We got some okay volume, 643,000. Maybe. What's the float on this? Let's remind ourselves. Is this low float? No, 41. All right. Possible. I don't think it's a great one yet. Possible. Heading down HRL. What's this? No, this is no good. Hormel Foods Corporation. No. That's no good there. Let's see Dow. And no good for day trading. Now Therion. Did I say that right?
They're also talking about swinging it overnight ahead of earnings, which many of us think is not a great idea.
Be careful with that. Yeah. So HRL, yeah, be very careful with that. But yeah, for day trading, not looking good there. Delta Airlines, again, we had the airlines yesterday gapping down and they popped up. They ended green for the most part. I don't really think this is in play. Kiwi Kev. I mean, there's just not a whole lot going on there. Their volume is very light. Even American Airlines, which tends to be the one with the higher volume, I'm not seeing anything good happening at the moment. And overall, these right now, they do not have their own catalyst besides all the cancellation of flights, which really didn't do a whole lot, right? I mean, we had tons of cancellations and we're still right here. So we had a little bit of a gap down reaction, but not much move from that. So I don't think that's a big catalyst just yet. We'll have
You
to
seen
wait and
airline
see.
prices recently? Oh yeah, well, you just went to Vancouver.
Yeah, I went to Vancouver. I had to fly with a stop because the direct flight was just ridiculous.
Everything's packed,
It's ridiculous.
and
Yeah,
the prices are astronomical.
yeah, yeah. On the way back, I got lucky. There was, I guess, the person didn't show up, but the plane was packed, and only one seat was empty, which was the middle seat in my session, which was great. But the whole plane was packed all the way to the back. It is crazy. So I wonder if some of these cancellations, they say weather, but I wonder if the airlines are saying, no, let's just consolidate, cancel a bunch of flights off, and make people jump on other airlines to pack things. I would not be surprised. But yeah, guys, it's insane. I don't think these guys are really in play. We'll have to wait for the market open, see if anything pops up. Heading down, Snap, David from Connecticut. How low can you go? Snap. What are we? What are we at? $5 on Snap? What are we? Yeah, Snap right here, $14. A huge gap down a few days ago. Um, could be interesting. I don't see a lot going on right now, but could be interesting if we do decide to lose some levels, David. We'll have to see. All right, Apple. Yeah, I'm gonna watch Apple, of course. I'm gonna watch AMD. I'm gonna watch the ones that I expect to get some volume. I mean, they're not really in play, but Apple right here is actually up almost half a percent. You know you're gonna get volume on this one. So I'm gonna watch it. Again, not in play, guys, just having something here in case the SPY is going to do something. AMD is going to be another one that moves very well with the overall market. So I'm just gonna put that one on there. Just looking at tickers that in the past, if the SPY does do something here today, we can actually take advantage of. And as you're seeing right now, the SPY is up almost half a percent at the moment, and you're seeing Apple and AMD react to it. Most of these other companies are not doing anything towards that SPY reaction. So we're going to watch tickers that are going to follow that. Apple, AMD, Nvidia is another one. You know, pretty much the heavy tech stocks tend to follow the overall market. That's what we're going to be looking at. Tesla's another one that moves very well. So we'll look at Tesla. So here we have Tesla right now, pretty much flat, but getting into the green. So again, just the regular usual suspects are coming in here today, because there's nothing else that's really in play. Oxy is another good one as well, that I'll watch, and I think that'll be my list, man. I think that's really it. There's nothing really that's heavily in play on its own. Heading on down, CRM, guys. The only reason why I don't have CRM on my list because I see a couple of you guys throwing that one out there. I do not like the way this thing trades. I do not like the spread on it. It's usually $1 easily, even more at times. The volume is significantly light on this thing for the price that it is. I'm not a fan. Today they have earnings, or was it last night? Right, was it last night?
Night.
Yeah. So today
Just
you
doesn't move
might,
well.
yeah, you might get a little bit of more activity today, but overall, even then, I just never traded this stock. Maybe once or twice, way back when. They just don't move well. I just don't like the way they trade. Let's look over on YouTube. Do you guys have anything that maybe we haven't looked at? Microsoft and Neo. Yeah, Microsoft is another one that you can take a look at. I have Apple, AMD, Nvidia, and Tesla. I mean, I'm so tech heavy here. I'm probably not going to add any more there. But Microsoft is another one that you can look at as well, Phil. So that's a good one. Neo. What is Neo doing today? Are we getting some volume on Neo? Oh man, look at Neo. Neo is just going sideways. I don't think it's doing much. It could be a good possible because the good thing about Neo that you know they're going to get the volume, so there could be some opportunities that come up and maybe not at the market open, but later in the day. So yeah, we'll add Neo to the list here as well as a possible at least. TNXP monkeypox news. What is that? TNXP. Is this a
Gotta be a bi-
vaccine?
well, it's got to be a biotech.
Hmm. It is some Tonics Pharmaceuticals, and they're getting a pop here, and they're up 38%, 13 million shares traded. TNXP, excuse me. Uh,
Get to
right.
announcements and then start on levels, and maybe some better
Yeah,
stuff will pop up as we get closer.
I agree. I'm gonna add this here to our risky pile. It is in play, guys. You got tons of volume here. Just be careful, but it is in play, moving pretty well this morning. All right, guys, let's take a look at community events and announcements, and let's see what's happening for this week.
All right. Next Monday, we've got Kyle doing Bookmap Part 1, and then the following week, Bookmap Part 2, 8 p.m. Eastern. Eamon's trend trade webinar should be posted soon. I know there's some issues with that recording, but I think it's worked out. And then next week, Tuesday, Peter will be doing Rising Devil, Fallen Angel, 8 p.m. Eastern. Psych webinar with Dr. Reed tonight, 8 p.m., talking about trader development. Will I ever get there? Next week, Creta talking about the art of setting goals. Don't forget about mentorship on Thursday with John, Ed, and Thor, 11, 4, and 8 p.m. Also, stocktradingsimulator.com, our free web-based trading simulator. We also have tradingterminal.com that we've launched and are working on each and every day. And if you're watching on YouTube and you haven't been in the chat, you can use the promo code PreMarket24. When you go to the homepage, scroll about halfway down, you'll see the membership table. You can pick that intro membership at 7 calendar days, 5 trading days, does not auto-renew. So check that out.
All right, thank you very much, Norm. All right, guys, let's see what we have on our list here. So a couple of good comments here on YouTube. Yes, I did see that, Ben, about pilot shortage on some of the airlines, which again just makes sense, right? They were laid off. A lot of them were on furlough for quite a bit, for quite a long time. So if they got into some kind of other business or did something else, they might not be wanting to come back right away. Who knows? So yeah, I did see that on there as well. And then some other names you guys are pulling up here. Let me check this one. Stock Pigeon. You're giving us MULN. MULN. No. More of a penny stock. So yeah, I'm not gonna have that on there. Okay, cool. Let's take a look here on our list, guys. We have AMC, we have Apple, AMD, Nvidia, Tesla, and Oxy. And if you're wondering why this list looks like that, it is pretty much probably the top stocks that we've been watching probably the last 12 months, right? Apple, AMD, Nvidia, and Tesla. And actually, Oxy is on that list as well. We've been watching these stocks right here. Have probably been on our list more than anything else, at least on mine, than anything else that we have on the stock market, right? Because they've just been trading so well over a very long period of time, especially with the way the market's been moving, with such aggressive moves. These stocks have been doing very well. AMC, not so much, here and there, hit or miss type stock, but today, and yesterday they have good volume, 1.7, so we'll be keeping an eye on that. And then we have some possibles here that are not looking great that can hopefully get going as the market gets close to the open there. So we'll do levels. Let's start with AMC here. This morning, I'm going to remove some of the stuff from yesterday because it's overlapping with our highs and lows of the last 2 trading days, right? You can see some of that there. So let's get rid of these levels. There we go. And we're going to mark down the low of the pre-market at 1366. I'm going to mark down the high of the pre-market at 1473. And then if you look outside of this window, you're pretty much set highs and lows for the last 2 trading days. So that is good there. Outside of this, maybe over here, 1320 might be a good one as well. You got a couple of days opening, closing in that area there. So that's good. And then from 1470, if we do decide to get back into the green and up to above 1470, above 15 in here, I think we had this mark before. This 1535 area does show a little bit of support right in here, so you might want to have that marked down. The bigger range is going to be this one. This is the bigger one, 1470, and this 16, which is your highs from yesterday. We couldn't get above that. But that 1535 showing some action there as well. So we'll see what AMC is going to do here. Right now, great volume. Might be a couple of big block trades because I'm not seeing that 1.7 traded here this morning. But I expect them to get some good activity today. It's just how they're going to trade. Apple, AMD, Nvidia, all of these guys are just doing whatever the market is doing. If you look at them here, starting with Tesla, looks very similar to Nvidia, very similar to AMD and to Apple. If you see this run that you're getting here now, right? If you see that and we switch over to our SPY or even our Qs, you're going to see the same flow, right? Same exact idea there. It's just kind of going with the overall market. If we look at the Qs, same thing. So that's the only reason why they're on here. The only play today is watching what the market does and seeing what's moving. I'm going to have eyes on the scanners, especially for those that like to trade the 5-minute open range breakup and breakdown, or even the 1 minute. That turbo breakup and breakdown scanner is pretty good. So if you see something come up there quite a bit, hitting it with some frequency and some volume, those are pretty good to look at and kind of take advantage of. I think you looked at yesterday's pre-market levels on AMC. AMC, let's take a look. Yesterday, well, no, this is today, right? And some of the stuff we have here are from yesterday highs and lows, right? So I just added 13, 14, 70, and 15, 35. So yeah, these could all be overlapping, right, from before days. Yeah, absolutely. Because if you look at these levels, you can see they're hitting other days before in the past. So previously, there were highs and lows at one point from the previous days, right? Um, all right, so that's AMC. Here's take a look at Apple this morning. Yeah, we'll look at Trader Chris. We'll look at CRM in just a sec here. Here is Apple. Apple has a great daily. Again, not moving on its own, doing whatever the market is doing today. Slightly in the green. Low of the pre-market, slightly below the previous day close at 148.35. And your pre-market highs being set here at 149.89 for the most part, slightly below the highs and lows of the last trading day right over here. So if we're able to hop out of this, I would love for this to go long if we can be strong here. Let's get some levels, some clean ones, very clear ones over here. 156, 59. That's a nice level there. You can see the nice support you're getting off of that. So definitely going to be a level there that can become resistance. I don't think today or this market at the moment has that type of move, especially towards the upside. 153.49 is another level where you're seeing a little bit of support there. That can also be a little bit of resistance on the way to the top here. So we'll have to see how things play out there. Here is AMD, guys, pretty much similar to Apple, as I mentioned before. So right now, heading back to the previous day close, as far as levels, you're surrounded by the highs and lows of the last two trading days, right? And the previous day close really smack in the middle of this at the moment. I'm only going to mark down the low of the pre-market at 101.5 and the high of the pre-market, which is 102.36. I have 102.40 here, which is the highs from 2 days ago. So this is good enough for me. I'm not going to add any more levels on here. I think you're all set on AMD. Here's NVIDIA. NVIDIA also is stuck between these highs and lows, guys, of the last two trading days. Another one that I think all you need to add is just the low of the pre-market and the highs of the pre-market. I think you're pretty much set. That's the tight range there. And inside here, slightly above the previous day close. And then outside, you got your highs and lows of the last two trading days. Pretty much setting your expectations there. So you're taken care of there. Here is Tesla, guys. So Tesla, again, they're all very similar chart here, guys, right? We just popped up. We're kind of consolidating. In doing so, our highs and lows are creating levels around the price action. This one pretty much right below the previous day close. And just need to mark down the low of the pre-market over at 745. And then your previous day close is right on here. Your highs for this pre-market is basically the highs from 2 days ago. So again, you're pretty much taken care of there. All right, let's see. Oxy. Oxy had a big sell-off day yesterday, but again, this is coming after a beautiful run, right? If you look at Oxy, we've been paying close attention to this one. And if we just go back and recap, here is your support that we had at 54. The range that I tried to get above this was around 62.50. I finally did that a couple of 2 weeks ago, or maybe 3 now. And then you can see here it's trying to stay above this 62. So you are going to have some sell-off here. This stock breaking into a new range. Can it create a new range here now with this 68, right? Let's see what it's going to do going forward. But again, this sell-off is not a really a bad one. I think it's pretty decent based on how it's done on the daily. If we look at the pre-market activity today, which I don't put a lot of weight on when it comes to Oxy, because we know for a fact after watching this stock so much, they can trade very well at the market open. So I'm going to put down 69.96 low of the pre-market and 70.66. And if you step back and look at the entire chart here on the daily, you're set. Highs and lows doing a pretty good job of surrounding the price action here. Previous day close towards the bottom. You gapped down pretty aggressive yesterday, but you're gapping up a little bit today, 1.5. So let's see what Oxy is going to do today. But Oxy has been trading very well, guys. Good volume in here. And again, the overall price action has been fairly clean. Not always, but fairly clean for the most part. Looks like your charts wasn't updated. Oh, okay. Gotcha. Yep. Gotcha. All right, so we are all set, guys. Here's our levels for today. Then some secondary stuff. Here's Neo, which again I'm not going to put any levels on because I just don't think it's got it right now. Pretty much sideways action. SIGA. I don't think this is going to be good for today. I'm going to get rid of it. This will be a good one if we start hitting the scanners. GameStop. I'm waiting to see where the volume is going to come in here. They have earnings tonight, so I expect some action. Maybe not at the morning market open, but I do expect something to be coming up here. CHPT, charge point, not looking so good. Pre-market, USPT can get going here. They've been slowly closing this gap, right? So it's a little bit more than halfway of this gap down that we had here. Did retrace a little bit. We're back at it again here at 55. We're going to continue to push higher there. So this thing's been doing okay. And then we've seen an increase in volume since this gap down, right? So it's definitely woken up the stock a little bit. That could be a good one. My thoughts on CRM, someone asked earlier. If I look at CRM, it is in play today, guys. Definitely in play. Is a stock that has had earnings last night. I do not like the way the stock trades. That is just my take on it. It is very very whippy. The spread is very bad, which right now actually only 30 cents. That's not bad pre-market. Again, they have earnings today. If you do like, I mean, earnings last night. If you do like the stock, today's one of those days where you can watch this one, right? I hate the way this stock trades. I hate the way it moves. I don't like the pullbacks on it because mainly because of the spread. So again, sometimes you could be in a good opportunity, and just the pullback alone will get you out of that trade. And I don't want to have a stop loss that's so far out that I got to take only X amount of shares. I'd rather just look for something else, right? So CRM definitely in play. I'll put it here as a possible, so you guys know that it is in play. So in case you like this one, you can definitely put it on your list. Definitely do that today because they're looking pretty good this morning for the stock that they are. CPRI, this one, it's another one that's very, very, very spotty, very light on volume, guys. Even on their best days, you're not seeing anything above 5.2 million shares traded here. So again, be careful with this one. That's gonna translate to very gappy price action, which again, the way I trade, I don't like to have a gap, of 25 cents on a $51 stock, right? And even then, you're seeing you're not getting a whole lot of activity. That's going to get better at the market open, but I tell you, not by much, because we've seen this before. That's not going to get better by much. So be mindful of that. Again, just all depends on your trading style. For the way I trade, this is not a good fit for me, but it is in play. They did have earnings this morning, and you were seeing a little bit of activity today. 277,000, by the way, for a stock that trades only 3 million yesterday, did 2.6 the day before. That's not bad. That is good. That is good volume. It's just not for me though. Definitely not for me. All right. What else we have, guys? Again, pretty light day today. Over on YouTube, if you haven't done so already, hit that thumbs up. We appreciate it as we get through this morning's watch list, which again is not looking all that exciting, but it will get better. We will find something to trade. It just requires us to be a little bit more patient and just wait for opportunities and not force things, right? That's going to be very important. TNXP is in play, guys. Definitely in play. Jorge, this is over here moving up 46% right now, 15.9 million shares traded. So this got some good stuff to it. Lower price stock, but again, just got to be very careful with this. It's got to mind your share size. They have a catalyst. Someone actually mentioned this over on YouTube. I think it's what is it, the monkeypox, whatever. Who knows, man? Who knows? Yeah, monkeypox news. So they're a pharmaceutical, so maybe a vaccine or something. Again, I haven't dug into that, so we'll see what kind of stuff they get here today. But again, moving very very nicely. Just keep in mind, guys, these things can drop so aggressively. So it is a lower price stock. Just be careful on the number of share size you take. You're getting 1 million shares right now here on this 5 minutes. So the volume is definitely there, and you're seeing some really good action there. TNXP, the flow is TNXP. Hold on, TNXP. I don't think it's a low flow. Actually, it is 16.7, 16.6. So that's what I have on Trade Idea. 16.6 is the float on this. So definitely a low flow in a pharmaceutical company. You know how these pharmaceuticals can trade. They can be so aggressive towards the price action. Look at this drop you're getting here. So again, just manage your risk, guys. If there's anything you can do to trade these stocks, you have to be an amazing risk manager. So they got a patent for a vaccine. Patent. Okay, good. That's good. They're preparing, and that could hey, this could be the next mRNA or something. Just let's hope not. Let's hope it doesn't get to that. How many cases in the U.S. already? 13. What do we hear so far? Was it 13? I heard last night on the news. Let's hope this is not another one of these things. Off my list forever. Pharmaceuticals been host so quickly before. Yeah, they're these lower flow stocks. This is why if you're a new trader, and we had a great onboarding class yesterday for our new members of the community. Some of them were not new traders. They've been trading for a while, just looking to join the community. And we had a good conversation yesterday. And again, if you're starting out, these low float stocks, there's nothing wrong with them. There is a way to trade them. But, when something does go wrong, it can be extremely painful to your bottom line. So this is why we tell traders, start with mid to large flow caps first, stock mid to large flow stocks first, and then if you have an interest on low flow stocks, right, you can slowly, learn about them and kind of get prepared. But start with mid to large first. It's gonna save you a lot of headaches, right? I think the learning curve is a lot shorter when it comes to these stocks. All right, guys, we're set on our list. Moderators are putting their list together. Any questions that we can get to, anything that we might have missed? APPS is in play today. Yeah, I saw that on the list. APPS is right on here. Oh, it's starting to look better than what I saw it earlier. This is looking much, much better. We started the show at 8:30. We had nothing to go on here. But now it's starting to look a little bit nicer. We're getting a little bit of a drop. Yeah, what's the float on this? Digital turbine. Man, this turbine is not turning at all. It's on reverse thrust right now. This thing is just getting killed. Look at this. No, 79, and we traded in the past. Obviously here, gap down. I have some levels from way back when, so we definitely traded this before. Oh man, $21. Yeah, Gary, that's what this thing is on. This thing is not moving forward at all. Yeah, let's add it to the list. Let's get some levels too. It's gonna be interesting today. Here on the daily, we have 21.56. We'll slam something right on there. And we are going to put this one also here, 23.78. And then pre-market low right now at 20.90 pre-market low at the moment. Let's see if that's going to hold. Have we been down here before in this stock? Let's go to the weekly. Let's go to the weekly here and see what we got. Weekly, yes. Well, man, we're going way back 2020 here. And we have, let's get some levels off for this. So right here seems to be one 29 off the weekly, and then we have another one here at 33.77. So in the daily action, right? So the higher time frame confirming our levels on the smaller time frame is pretty nice. And then here we have a nice little bounce of 20.90, and we'll see how this goes, guys. We'll see what happens here. All right, we are set here. Moderators list is coming up, and a couple of you guys throwing some stuff on here. HSDT starting to get going. All right, so this must have hit the scanners here. Ross, how you got this one? Hit the scanner somewhere? How do you find this one? Large spread on APPS. Let me check. I didn't notice that. APPS. Yeah, you have. Well, right now it's looking decent. Right now, I think it got better after we started looking at it now. It wasn't better when we looked at it earlier, but now it's starting to look decent. Only 4 cents, and that's going to get much better at the market open. The big volume, not too far away neither for pre-market, so that's not bad. That's not bad. I think that's going to be all right at the market open when it comes to the spread. HSTD, what we have here, HSTD. Let's take a look. This thing is cranking away. More of a penny. Yeah, more of a penny stock. Is getting some volume now. I'm not sure what the news is. Helios Medical Technology, so maybe some kind of another vaccine coming up here. Are we getting prepared for something? I'm gonna put this one on here. HSTD, HSTDT. Excuse me, HSDT. There we go. All right. SCD looks better this morning. STD, Jimmy. Yeah, this morning is not a blockbuster list. I'll tell you that much. Looking forward to what the moderators are going to be having here today. A couple already with their list. Thor, Tiffany, and Dima. Eamon doesn't like much today, as I can see there. So yeah, we'll have to see. Okay, let's see if I'm missing anything else over on YouTube. Anything you guys like? Amazon, CPRI. We looked at Apple. We have Phil. You're giving us laser. Crap pre-market, but outperformed yesterday. Could be good today. Let's take a look there. Laser. Have we traded? Is this the laser we have traded in the past? Maybe not. I'm not sure. Maybe. Yeah. So, like you said, I think we have to wait for the market open, right? On this one, see if the volume is going to come in. Their daily looks primed. If they got some good news and they can get going here, they can definitely take off nicely. It is Dan. Okay. Yeah. So yeah, we definitely. If this is that laser, we traded this quite a bit before. Yeah, here it is, right over here. Yep. It was just madness, guys. So they're back down to $10. I didn't realize they they dropped down so much. I mean, it's been a while, but look at this. They're back down to $10 here. So you know these guys can get the run if they can get going. Look at the volume here. A couple of spikes in the past, recent last year and the beginning of this year. But for the most part, they need the volume, right? This is that type of stock that they need the volume. Yeah, Chris MC, it's been some time we haven't had this one on the list. And here's the reason why, right? Volume has completely died down on this thing. All right, excellent. I like the daily on AMD. Yeah, me too. I like the daily on AMD. I like the daily on Apple and all these other tech companies. But AMD specifically, I mean, this one has been really nice to trade. So we'll see if it can get going here. We'll just have to check with the Qs and the overall market one has in play for these because, man, AMD specifically has been trying to get going. I feel like many times they get stuck in this consolidation. The market keeps selling off, and they're just trying to hold here. They don't want to go any lower. They've done that a couple of times. If it wasn't for the market, this stock specifically has done so well, and I think they'll continue to do well if the market can give them a little bit of a break. AMD, don't tell Peter. All right, moderates lineup is here. Let's go ahead and bring that over, guys, as we are getting close to wrapping up the show here. Let me go ahead and disable this video. As I do this, guys, if you haven't done so already, hit that thumbs up. If you're enjoying the show here, make sure to subscribe and hit that bell so when Artie and Andrew go live, you can get notified as well. They're going live for the closing bell Tuesdays, Wednesdays, and Thursdays at 3:30. So here it is, guys. Let's take a look. Moderates lineup. We have Dima. She is looking at Apple, AMD, Oxy, and Lee. Tiffany, NVIDIA, Tesla, and Apple. Thor will be looking at Delta Airlines, CRM, and the SPY, and of course the alerts from the pivot bot right there. And Amy will be looking at Para, not so clean right now, and mainly waiting for some alerts to pop up. Megan will be looking at the Qs, Lucid, and Apple. We'll look at Lucid. We haven't looked at that one today. That will be her list for now. So, all right, we are set, guys. Thank you so much over on YouTube. Let's take a look at Lucid before we hop off. What are they up to today? Their daily looks good. That's what you're looking at, their daily for possible breakout. So many like these guys that their daily has just kind of dropped down a little bit, and we're kind of consolidating here in the last couple of days, looking for that bit of positive news, positive push to get going back to some greenery here. So AMD, Oxy, yes, good, perfect. Okay, we're set. Recap, guys. AMC, good volume this morning already. Not looking so good, but I expect something out of this one. Apple looks very exciting, as well as AMD and NVIDIA. All of these, and including Tesla, just following the overall market. So this bunch right here, just looking at the SPY and waiting for it to do something, not really in play on their own. Oxy, nice sell-off yesterday. I expect this to get some volume today and trade well. Are we going to bounce from here, or is this sell-off going to come back down to 65? We're going to look forward to that Oxy one there. And APPS really starting to get going here, 723,000. We're getting great volume on this. Was dead at 8:30. Started to come alive here with some really good movement. And the spread, okay at times. I just saw it there for 15 cents, 20 cents. So be careful with the spread. That's not bad pre-market, but that's got to be tight at the market open. It can't be 20 cents on a $22 stock. That is just not going to do it. If you're taking 1,000 shares, you're already down $200. Yeah, I don't like that. I don't like that at all. So that's got to be very tight there. Make sure you take a look right up here. Don't got to go too crazy. Just come at the top and make sure, where is it? Right over here, level 1. Make sure this is showing, something decent, not something off the wall. All right. All right, guys, thank you so much for joining us this morning. Take care. We will see you guys again tomorrow at 8 a.m. starting with Engineering the Markets. We're going to continue here in the chat with Brian trading live this morning, taking us through the market open, and we'll see what his list looks like today. So take care, guys. Be patient today. There's not a whole lot that looks great today, so be very patient as you're setting up and getting ready to trade. Have a good one.